Get ready for the biggest financial move in tech history. Nvidia is pulling off the most sophisticated financial loop imaginable, investing $40 billion into its own customers in just 5 months. This move is either cementing Nvidia's dominance over the entire AI economy or causing a massive collapse. We break down the closed loop that is making the entire supply chain pay attention.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the market reaction following Palantir's earnings report and what it signals for the AI landscape. Palantir Technologies reported staggering revenue growth, but investors are raising serious red flags about its valuation, suggesting that even blowout results might not be enough to sustain that sky-high price tag. We investigate why historical patterns suggest a potential bubble burst is imminent for this major player. Now it's time to hear directly from the source. Nvidia CEO Jensen Huang has addressed thousands of graduates at Carnegie Mellon University, telling them to run, don't walk, into the AI buildout. Huang is emphasizing that this isn't just about software. It's about massive industrial expansion requiring electricians, plumbers, and builders to support the physical infrastructure of AI. Find out how this is reshaping the job market. And finally, the sheer scale of the empire. Nvidia CEO Jensen Huang has just become the world's 7th richest person, pushing his fortune close to $200 billion. Nvidia's market cap is at an all-time record high, shattering previous benchmarks, and the race for AI supremacy is heating up. Don't miss the full story on this financial behemoth and what it means for your future. Stay with us. Nvidia is reportedly executing one of the most sophisticated financial loops in technology history, having invested $40 billion in its customers over just 5 months. This aggressive capital deployment is positioned to either cement Nvidia's dominance in the AI economy or trigger a significant collapse. In its last fiscal year, Nvidia generated $97 billion in free cash flow, which CEO Jensen Huang directed not toward traditional measures like stock buybacks, but into 9-figure payments to virtually every company within the AI supply chain. Crucially, recipients of these large payments are immediately reinvesting the funds back into Nvidia GPUs, networking gear, and full-stack AI infrastructure, creating a closed financial loop. Analysts describe this as a circular investment theme, with reports mapping how capital cycles repeatedly between key players like Microsoft, OpenAI, and Nvidia. The scale of this financial maneuvering is highlighted by a $5 billion investment in Intel that has reportedly ballooned to over $25 billion in months, and a private equity portfolio that grew from $3.4 billion to $22.3 billion, yielding $8.9 billion in unrealized gains from equity alone. This aggressive financing strategy raises a philosophical question. Is Nvidia functioning as a chip company that invests, or a venture fund that sells chips? Nvidia's filings confirm these investments target companies building AI models that purchase its products directly. The bull case suggests Nvidia is financing the entire AI ecosystem, the mine, the railroad, and the bank, thereby locking in unbreakable demand. Conversely, the bear case warns that this elaborate circular revenue scheme is highly vulnerable. Any cooling in AI hype, cuts to capital expenditure, or a major player's financial distress could cause the entire loop to fail spectacularly. Nvidia has effectively constructed an AI flywheel, generating cash from GPUs, investing in customers, securing further GPU purchases, and generating more cash. The market is now focused on whether this perpetual motion machine can sustain its momentum. Nvidia Corporation is poised for a critical earnings report on May 20, which analysts consider one of the most consequential events of the quarter. While all signals suggest Nvidia will deliver substantial sales and profit growth, the recent performance of AI software company Palantir Technologies raises significant caution flags for investors ahead of the tech giant's results. Palantir recently reported a surge in first-quarter revenue, climbing 85% to $1.63 billion. This growth was fueled by an 84% increase in U.S. government revenue and more than doubling in U.S. commercial sales. CEO Alex Karp subsequently boosted the company's full-year sales guidance from 61% growth to 71%. Despite these strong figures, Palantir shares dropped more than 8% in the 2 days following the announcement. Investors concluded that the company's extremely high valuation leaves little room for exceptional performance. Palantir entered 2026 trading with a price-to-sales ratio exceeding 100, and its P/S ratio remains above 60, placing it within historical bubble territory. Analysts note that industry leaders at the forefront of transformative technology have historically failed to sustain a P/S ratio above 30, and raised guidance has been insufficient to pull Palantir out of this zone. Nvidia faces a similar dynamic. Its dominance in GPUs and the CUDA software ecosystem secures customer bases and drives extraordinary growth, yet its current valuation embeds expectations that may be unattainable. The report suggests that every transformative technology has experienced an early-stage bubble burst, triggered by investor overestimation of how rapidly businesses could optimize returns from new infrastructure. Furthermore, Nvidia is navigating intensifying internal competition. Major customers are developing proprietary AI chips for their data centers, creating cheaper alternatives that could gradually undermine Nvidia's pricing power and gross margins. Even in the event of a strong earnings beat on May 20, historical patterns suggest that May 21 could be challenging for shareholders, as lofty expectations are already priced into the stock, leaving minimal room for the upside surprise needed to drive further gains. Nvidia CEO Jensen Huang addressed thousands of graduates at Carnegie Mellon University in Pittsburgh, urging them to aggressively pursue careers in the burgeoning artificial intelligence sector, calling it a rare industrial expansion moment. Speaking to approximately 5,800 undergraduate and graduate students, Huang stressed that the accelerating demand for AI systems is extending far beyond traditional software, engineering into physical infrastructure and traditional trades. Huang emphasized that the rapid build-out of AI requires a massive labor force across multiple industries, specifically naming roles such as electricians, plumbers, ironworkers, and builders essential for constructing chip fabrication plants, data centers, and advanced manufacturing sites. He declared, "No generation has entered the world with more powerful tools or greater opportunities than you," signaling the birth of a new industry and a new era of scientific discovery. As the founder and CEO of Nvidia, the world's most valuable company by market capitalization, Huang highlighted that the demand supporting AI is not confined to software firms, but is spilling into factories, construction sites, and energy systems necessary to power large-scale computing. He stressed that the AI industry involves significant industrial effort, demanding coordination across engineering, energy, and manufacturing sectors. Addressing concerns about AI displacing entry-level jobs, Huang framed technological shifts as historically creating both disruption and opportunity. He noted that every major technological revolution brings fear alongside potential, and that societies can expand human potential by engaging with new technologies openly, responsibly, and optimistically. Huang reiterated the urgency of the moment, telling graduates to run, don't walk, as the technology shift is simultaneously creating work across a broad spectrum, from chip design to the physical infrastructure supporting data centers. This message contrasts with rising anxiety among students regarding AI's impact on career paths. Recent polling indicates that nearly half of U.S. college students have seriously considered changing majors due to AI job worries, and a significant portion of students feel AI has prompted reconsideration of their fields of study, underscoring a broader sense of uncertainty regarding automation risks and future career stability. Nvidia CEO Jensen Huang has cemented his position as one of the world's wealthiest individuals, potentially pushing his net worth close to $200 billion. According to estimates from Channel YouTube's Real-Time Billionaires list, Huang's fortune reached $191.5 billion on Monday afternoon, marking a gain of $5.6 billion for the day. This places him as the world's seventh richest person, surpassing Dell founder Michael Dell. Meanwhile, Dell's fortune saw a slight dip, falling to $191.2 billion after losing $2.9 billion. Huang's wealth increase is linked to his 3% stake in Nvidia, whose shares rose 2.4% on the day. Nvidia experienced a monumental trading session, achieving a record close that surpassed a previous high of $216.61. This rally propelled the company's market capitalization to an all-time record high for publicly traded firms, exceeding $5.3 trillion. This figure reflects a 4-day winning streak that has added approximately $550 billion to Nvidia's market cap, a feat only achieved by 18 U.S. companies as of Monday. Nvidia's market valuation of $5.36 trillion places it significantly ahead of Alphabet, the world's largest company, which holds a market cap of $4.7 trillion. Nvidia holds a unique position as the only publicly traded company to ever cross the $5 trillion market capitalization threshold. The surge in Nvidia's stock is fueled by robust demand for AI infrastructure. The company reported sales exceeding $68 billion in its latest quarter, a 73% year-over-year increase, with data center revenue contributing about $62 billion. This growth occurs as Alphabet emerges as a major competitor in the AI landscape, with J.P. Morgan analysts praising Google's measurable returns on AI investments, projecting Alphabet's AI segment to reach $190 billion by 2026. Further bolstering the positive sentiment, Intel CEO Lip-Bu Tan shared a photo with Huang on X, announcing a collaboration between Intel and Nvidia on exciting new products. Nvidia is scheduled to release its earnings report on May 20, with Wall Street projecting $78.6 billion in revenue for the upcoming quarter, representing a substantial 78% annual increase, according to FactSet.